Hello, good evening. Welcome to this stock investing meetup in Farmers Branch, Texas, Feb 23rd, 2019. My name is Neil. So today we're going to take a look at how to evaluate stocks. I'm going to share some of the techniques that I use when I'm evaluating a company and its stock to see whether it makes sense, whether it's a worthwhile investment proposition. Also, we'll take a look at our previous portfolios. As you know, we have one portfolio each month. And then we'll take a look at some new stocks, which are part of the February portfolio. As I mentioned earlier, the central question, the only question really is, are you making money? All of the other stuff, the economic data, all the discussions, the pundits in the finance business, all the talk, all the jargon, a whole lot of noise. Try not to get too distracted. That would be my suggestion. The only thing that really matters is, are you making money? So keep track of these stocks that I'm going to mention and have mentioned in the past. I'm not recommending any of these, but if you like, you can take a small position just as a trigger, as a prompt to remind you to track them. And we have this meetup the last Saturday of each month, the next one being on March 30th. Okay, so these are some of the ways I try and evaluate or to assess a company. And by the way, it's only going to be long positions. Buy the sell, the short positions, the sell is a whole different ball game. So that's not included. That's out of scope for this meetup. The way hedge funds or investment houses or institutional investors do it, one of the main ways they do it is valuation. Looking at all the financial statements, the ratios, asset liability or debt equity ratio, growth prospects. That involves a little bit of guesstimates. You've heard of that expression, forward-looking statements. Yes, so in that they say the statements below are what we expect, we believe, we anticipate is going to happen. So, we'd like you to be aware that they are forward-looking statements. So growth prospects includes some of that. And then they arrive at an intrinsic value so they can compare it with the market price. So this is going to be per share, intrinsic value, and then the market share, of course, is quoted per share. So let's say intrinsic value is $12. If it's currently trading at $7 or $8, you can say this stock is undervalued and it might make sense to buy. Is it a good deal? That's what you're trying to evaluate by using this valuation technique. So when you invest in a company, it's very similar to buying the entire business. But of course, you don't have to spend hundreds of millions of dollars. You can buy a very tiny portion of that company, a few stocks. But the principle, the underlying approach is still the same. Will I buy this business? Does it make sense? The same as you would if you were buying a car, drive it around a few blocks. buying a house, is the heating, air conditioning working well? Does it have mold, termites, all kinds of things. So the greater the number of criteria that you can check off and say, yeah, that's good, that's good, that's good. You might have 8 or 10 or 12. So the more pillars, the more stable it is. One of the things to look at is to find out if this company has any legal exposure, any liability. How do you find out? When you do a search with a company name, usually the first 5 or 10 results would be, this company got hit with a class action lawsuit or some problem they might be facing. So it's a good idea to look into that. Obviously, you would prefer to invest in a company that doesn't have such liability. For example, Pacific Gas and Electric, not too long ago, was blamed for these wildfires out in California because they said your faulty equipment caused some of these fires. So they were facing up to $30 billion of liability. They said, no, we don't have that kind of money. So they declared bankruptcy. I don't know, Chapter 11. They did some restructuring. I haven't heard what the latest is, but that's what they were facing. Or this company, Purdue Pharma, it's a private company, so you can't buy shares in it. It's largely owned by the Sackler family. This company makes OxyContin linked to the opioid crisis here in the US. So several attorney generals of different states are suing this company because of the violations of the law. And if it were a public company, then you would obviously think twice about investing in it. So it's a good idea to initially make sure the company doesn't have too much exposure. Next, you got to look at the product or the service that this company offers. Is it a Me Too product, like a hair salon or a nail salon? Well, 2 or 3 blocks away, you find another. It's a Me Too product. Is it an invention or an innovation that this company has? An invention would be like the Wright brothers in 1903 invented a flying machine, an aircraft. An innovation in that same field would be, instead of propellers, they came up with the jet engine. So that's an innovation. Or baggage. People would have to lift the bags, right, if they were going to the train station or airport or whatever. So someone came up with an idea, hey, how about putting some wheels on the bags, and that way they can roll it along. It's much easier. Is there a growing demand for this product or service the company has, or is it declining? When they invented the light bulb, Thomas Edison actually, the demand for candles and oil lamps receded. When they invented the car, the demand for horse and carriage declined. When they invented the computer, the word processing, demand for typewriters began to slow down. Sometimes it's also true that the product is good, but the market isn't quite ready for it yet. Happens a lot in the pharmaceuticals business. There isn't yet general acceptance for the product. There isn't enough of a track record. Or electric cars, for example, they need charging stations all over the place, and they don't have them as of now. If they can find a new way where people can charge the batteries at home, in the hotel, at a workplace, that would make it much easier. And just a minor point, it's the stock market, the company that you're investing in. So your personal opinions don't really matter so long as, to the extent that it's an investment decision. For example, I don't drink alcoholic beverages, But I wouldn't mind investing in a company like Boston Beer Company, maker of Sam Adams beer. So just something to keep in mind. So is it a strong product or service? How can you tell? Do they have patents? That would be good. Gives them some exclusivity for some period of time. Do they have vigorous research and development? Are there new product ideas coming down the pike? Do they have operations in several regions rather than being concentrated in just one or two spots? The more widespread their operations are geographically, the better it is. If there is some kind of a calamity, a catastrophic disaster, hurricane, tsunami, earthquake, something, or political upheaval in some region which disrupts their operations, maybe agriculture, manufacturing, or distribution, having business operations in various other regions obviously puts them in a better position to withstand this trouble in one part. Do they have subsidiaries? Are they well aligned to the core business? Is there synergy, meaning 2 plus 2 is 5? Do they have vertical integration? Like if it's a rum company, they can acquire upstream maybe the sugarcane plantations, or downstream, let's say the trucking company that delivers the product, and so on. And horizontal would be a rum company buying another rum company horizontally. Does the company have a decent market share? I mean, to state the obvious, the bigger the market share, the better it is. So how do you calculate this? Choose a time period. So annual is a good time frame. For example, company revenue divided by industry revenue multiplied by 100 gives you the percentage market share. You may be wondering, how do I find this information? Where do I find it? So you can look at the company's own annual report, or trade associations often have this information, or independent sources. For example, this website, it's all free. None of this costs any money. Here, for example, is the airline market shares, American, Southwest, Delta, United, and so on. And finally, what's the outlook on the financial side? Income expense statement is for a period of time, monthly, quarterly, annual, whereas the balance sheet is a snapshot as of, like for example, as of December 31st, 2018. Assets, liabilities, and equity. So we are trying to determine, is the company profitable? Now, a point I'd like to make here is that just because it is unprofitable doesn't always mean that it's not a good candidate to invest. For example, a company may have had $80 million loss in 2014, 60 million in 2015, 40 million the next year, and 10 million the most recent year. So what you notice is a trend toward declining losses, which means the company is headed to profitability. Especially venture capitalists, they know that. They know that a company doesn't start to make money right off the bat. The first few years often, very often, are losing years. They lose money. And then the company begins to come, rise above ground level and then starts to make money. So keep that in mind. That would be helpful. You're trying to determine, is the company financially strong? You can look at the long-term debt, short-term debt. They're cash and equivalents on hand, all kinds of things. Retained earnings on the balance sheet is a good place to look at. So if you're wondering where to find this information, it's to be found in the company's own annual report. You can also look at a site like Yahoo Finance or something similar. Look at their financials. And the SEC filing, 10K is for the annual time period, yearly. SEC, Securities and Exchange Commission. So how do you find it? Edgar is the database. It's all free, by the way, no fees here anywhere. It's all free. Let's say put the company name in here, Microsoft, for example, and it comes up with all the filings that Microsoft did. So you scroll down and you get to 10K here, click on that. Most companies offer these in, like various formats, HTML, Excel, PDF, and so on. So click on 10K and that form opens up, scroll down, and that's where you see the financial statements and supplementary data. So click on that and you can see all of the income statements and balance sheets and all that. Just a quick note, these numbers are normally in the millions because they don't want to put too many zeros in there. So these are the techniques that I use. Other people may do it differently, but these are some of the things I look at when evaluating a company to determine whether or not it is a good candidate to invest, to buy some shares in. And once this is done, then I look at the charts. So using that same Microsoft example, the company is good, but I wouldn't get in at this point. I would much rather wait for the price to drop maybe in the $40 or $50 range, somewhere there. So you just put it on your watch list or keep it aside, come back to it maybe 3 or 4 months later. So the way I do it, it's a two-step assessment process. Evaluate the company, and if it looks good, then look at the chart. Or you can do it the other way. You can look at the chart, oh, it looks good. And then you look at the company to make sure the financials are strong, the product or service is good, meaning it has good demand, it has some exclusivity, maybe they have some patents, they have geographical diversity in their operations, all of those things that we just talked about. It happens sometimes that the chart looks good, but the company, the business model, not so much. So this company's site is into shopping centers. This is their homepage. Retail is evolving. Yeah, sure. We know for a fact from our own experience that we buy stuff online compared to 10 or 15 years ago. More and more people order stuff, and then FedEx, UPS, DHL, whatever, Amazon has its own delivery. The product gets delivered. Yes, we do go to physical brick and mortar retail stores for some things, but a large percentage of our buying patterns have now moved online. Also, landlords, they're complaining, they're grumbling that their retail space is going empty. And thirdly, just driving down any town or city in America, you might have noticed that retail space is more empty now than it used to be. So that's quite plain to see. It's evident that retail is shrinking. So this is the chart for this company's site. Normally, I would have considered it a good place to buy, but the business model gives me pause. I'm reluctant to take a buy position here because of the business model. Now, if the management of this company is creative, innovative, comes up with new ideas about how to put their strengths to good use, how to navigate their way through this declining retail space situation, well, the company might then turn around and might do well. I don't know at this point. So I would be reluctant to invest in this company. Okay, so those are the ways I normally go about assessing whether I should invest in a certain stock, looking at the chart, looking at the company itself. Okay, next, let's take a look at the previous portfolios. We're in February now, so December and Jan. And after that, we'll take a look at some new stocks that will be part of this February portfolio. So all of these are available on YouTube. Each meetup is recorded, as this one is. December 28, market close. Those were the prices. Technical Communications, China Mobile, Denbury, 3D, and so on. As of today, as of yesterday's market close, Friday, these are the prices here on the right. So we have roughly an 18% increase in the December portfolio. So that's in 2 months. We still have 10 months to go because all of these are with a 1-year time horizon. So I wouldn't be surprised at all if we exceed that 50% ROI on an annual basis. As of today, this is an 18% rise. The January portfolio is kind of flatlining at this point, but we still have 11 months more to go. So Lithium, Hudson Refrigerants, Amira Foods, Travelport, and so on. Jan 26, and as of today, on the right. So the ones in gray were orders to buy. They didn't get triggered yet. So perhaps in the next few days, the price will reach that level, and those orders will then get triggered. So the Jan portfolio pretty much stayed steady, but we'll see in the next 11 months. I expect it to rise or gain 50% or more ROI on an annual basis. Okay, so let's now take a look at some new stocks for the February portfolio. Bristow is a company that transports people from land to offshore oil rigs. They also do some search and rescue, but the oil rigs, that's the major part of their business. This company's stock is now at $1.46 as of yesterday's market close, Feb 22nd. So this is where I'd get in. Perion, this is a company based in Israel. They help publishers, meaning companies that have websites or content providers, anybody. They connect them with advertisers, companies, brands that would like to advertise and reach the right audience. So it's a data-driven way of doing this in order to target the advertising message, the timing to the right person, the right range of people. Their stock now is at 301, has already begun its rise the way I see it, and I expect it will continue to rise. Turtle Beach, they make headsets for the gaming business mainly, and they also have some audio equipment. I believe this company is based in San Diego, California, if I'm not mistaken. They're now at 1546, but I'm going to wait a little bit. I'd like to get in at $9, right about there, just under here, rather than lose the $6 on the way down. So I'm going to, I've placed an order to buy at 9. 5G is now coming. They have begun rolling out the next generation for internet connectivity, 5G, and that's what this company is into. They are well positioned to take advantage of that. They make fiber optic cables and copper cables and other things. So their stock is now at 491. You could get in someplace here, but I'd like to go in just a little bit under that. So I've got an order to buy at 4. Weight Watchers, a well-known name, diets and weight loss and all that stuff. So they're now at 29.55. It might hover in this range just for a little bit before beginning its ascent in the near future. Valco Energy, I believe based in Houston, Texas, but their operations are in Gabon. That's in West Africa. So petroleum, natural gas, they're at 249, and I expect this will continue to rise. Owens & Minor, they package products and services and provide those as a bundle to hospitals, healthcare providers, and others. So that's a link, a coordinating, facilitating link between manufacturers and creators of services and the companies that are the users. So they're now at 638. And I expect this to begin its rise in the near future. TAT, this company is based in Israel, and they provide environmental controls, basically heating and cooling for the aviation industry, civil aircraft, civilian aircraft, and also military aircraft. Now at 643, anywhere here in this neighborhood is fine, in my opinion. Even if it sinks a little bit, it's fine with a 1-year time horizon for all of these. Intelligent offers generic drugs, so obviously the pricing is lower, so there is good potential. and they're now at $1.54, toward the lower end of its scale in the pattern. A good point to get in my opinion. Leap, another company in the pharmaceuticals business, they focus on cancer drugs, but it's a very innovative company, so they're coming up with new ways to go about providing relief. Now at $1.64, it's a good point to get in, as I see it. CheckCap, this is an innovative way to provide doctors and medical professionals a better view of the colon rather than any invasive methods. This is a non-invasive, easy to use technique. So basically it's a capsule that a person swallows, and as it passes through the digestive system, it uses an ultra low dose of X-ray and then wireless communication so that it can capture the contours of the inside of the colon. And that's they first want to assess what the situation is. Doctors want to see it, so this is a good way of doing that. They're now trading at $1.92. I expect a good rise for this in the next 1 year. Carvana, online buying and selling cars. Maybe you've seen it, or Okay, so at 38 now, and should continue to rise. Okay, so those are the 12 stocks I have in the February portfolio. We'll keep track of all of these stocks for each portfolio, one portfolio per month, so that we can see whether or not it achieves the 50% ROI goal. So we'll keep an eye on this. The next meetup is going to be on the last Saturday of March, which is the 30th. Okay, so that brings us to the end of my presentation. Thank you all. Thanks very much. See you on March 30th. Thanks. Bye.